Bitcoin's price has always been a hot topic among investors and enthusiasts, with many wondering if it could reach $250,000 by the end of this year. This prediction isn't just speculation. It is based on several critical factors that have historically influenced Bitcoin's value. One of the most significant factors is Bitcoin's limited supply, which is capped at 21 million coins. This scarcity makes Bitcoin a deflationary asset, meaning its value can increase over time as demand grows. But it's not just about supply. The upcoming Bitcoin halving is another crucial factor. Scheduled to occur approximately every 4 years, the halving event reduces the block reward for miners by half. This directly affects Bitcoin's supply rate, making new coins harder to produce. Historically, Bitcoin's price has surged in the months following a halving due to reduced supply and increased demand. Could this upcoming halving be the trigger for a price surge to $250K? Another important factor driving Bitcoin's potential rise to $250,000 is institutional adoption. Over the past few years, we have seen major companies like MicroStrategy, Tesla, and PayPal invest heavily in Bitcoin. Institutional adoption has provided a level of credibility and legitimacy that was previously missing. As more institutions allocate a portion of their portfolios to Bitcoin, the demand continues to grow, which can significantly drive up its price. Furthermore, global economic conditions are creating a favorable environment for Bitcoin. With rising inflation and currency devaluation in many countries, investors are seeking safe haven assets. Bitcoin, often referred to as digital gold, has become a popular choice for those looking to hedge against inflation. This increased demand as a store of value can push Bitcoin's price higher, especially if economic instability continues. The potential for Bitcoin to reach $250,000 also depends on technological advancements within the Bitcoin network. For instance, the growth of the Lightning Network has made Bitcoin faster and cheaper for everyday transactions. As Bitcoin becomes more practical for daily use, its utility increases, making it more attractive to a wider audience. This could lead to a surge in adoption and, ultimately, an increase in price. Moreover, regulatory clarity in major markets can play a key role. As countries like the United States, the European Union, and Japan establish clear rules for cryptocurrency, investors feel more confident entering the market. Positive regulation can attract more institutional money, which can drive Bitcoin's price higher. However, regulatory uncertainty can have the opposite effect, leading to price volatility. Therefore, clear, supportive regulations could be the catalyst needed for Bitcoin to hit $250,000.
Lastly, market sentiment plays a significant role in Bitcoin's price movement. In the world of cryptocurrency, hype and speculation can drive prices just as much as fundamentals. Social media platforms, celebrity endorsements, and news events can trigger massive price swings. For example, a single tweet from a major influencer or a positive news story can send Bitcoin's price soaring. However, it's important to recognize that predictions of $250,000 are speculative. While the factors discussed, limited supply, institutional adoption, economic conditions, technological improvements, and positive sentiment, create a strong case for a price surge, the cryptocurrency market is inherently volatile. Prices can rise or fall rapidly based on market events, regulations, or macroeconomic factors. In conclusion, Bitcoin reaching $250,000 by year-end is possible, but it is not guaranteed. Investors should be prepared for volatility and should only invest what they can afford to lose. Understanding the factors driving Bitcoin's price can help make more informed decisions.